we've got markets a little bit higher here this morning. We did get some positive news in the trade dynamic world. We heard from Trump actually making the announcement that a massive trade agreement, everything's massive when it comes to Trump, right? Massive, great, the greatest you've ever seen. I don't know if you guys have ever seen those, the Trump impersonators, but some of those make me really laugh. They're hilarious. Trump announces a massive trade agreement with Japan. So of course, this is a positive thing. Any sort of deal, any sort of progress in trade is very, very welcomed by this market. Sorry, my cat is. I have a white light that's on me, and my cat is like really unnerved by it right now. She wants to like hit it for some reason. Yeah, so we have got, in terms of the NASDAQ's a little bit higher here today. S&P 500 higher. Russell is also higher. Look at the Nikkei, by the way. Like here's the winner on the day is definitely the Nikkei, up 4%.
Point being, Nikkei's up significantly this morning. We have a big break above that 40,000 level on the Nikkei and approaching the previous all-time high around this 42,000 on JP225 here. Really strong push. I believe this is a bullish setup. Yeah, it is. Nikkei is a bullish setup on the Edge Finder. Actually looks really attractive to me now on a pullback. I know obviously shoulda, woulda, coulda been in this trade already, but nice break here, and a pullback looks really attractive to me, especially into this previous level. We can actually clean up. Let's just start fresh on the Nikkei because this is an interesting chart to me at this time. So you clearly have a lot of momentum, right? You have strong momentum forming here, especially with the big break today on strong news, right? Trade deal with the U.S. It's kind of like these other countries when they secure a deal with the U.S., it's a big sigh of relief. We saw that with the U.K., right? And so now Japan and places when they sign a deal with the U.S., when they kind of take their medicine and move on, it kind of allows investors in those countries, economies, people who are investing in the Nikkei, right, trading the Nikkei, they can kind of be like, hey, you know what? It's behind us. We can move on from all the tariff drama and get back to business. And so I think that you've got a really strong breakout here that, in my view, should last. I mean, global indices look good, and so in a pullback, for me, the Nikkei would be interesting. Especially this previous area, the shelf of support that we had form here, that would really be the most obvious place for me. So yeah, looks really good and looks like it wants to go back and retest these previous all-time highs. So yes, move is based on a deal with the U.S. Prospect coming into play. And, you do have to some extent, even if you don't love or you're not a big fan of the Trump administration, trade deals take a long time to formulate. They're not, Trump, when he came out swinging with these, is like, oh, we're going to get everything done in 90 days. It's very difficult to get trade deals between two giant, giant nations. And so, to their credit, there's been some strength here in terms of deals getting done, progress being made. And again, a lot of people are like, oh, well, there's no more trade deal. Like, trade deals are not coming fast enough. They take a long time to hash out. They're very complex things to negotiate back and forth. But market clearly loves when there are deals signed. EU is expected to be coming too. India is also expected. You've got all these deals that are kind of circling finalization, which is a very promising thing for markets. If they weren't circling finalization, if they weren't looking promising, the market, in my opinion, would not be near all-time highs, right? If things were going poorly and countries were turning their back on the US and saying, no, we don't want to trade with you, if that was the story, the stock market would not be at the all-time highs, right? And if things were going really poorly, gold would be up at like 3,700, right? Gold would be going crazy right now. It's been stuck in a range for the last few months. So trade deals are in progress. They're seemingly, the market is telling us, they're more promising than not in terms of, them potentially disrupting things again. I think that every day that passes, that negotiations continue to go on. it's a more and more positive thing for markets. And that's not to throw into the mix that you have rate cuts coming down the pipeline, most likely. You have company earnings that have been very strong in recent quarters. Let's see if, we're going into earnings season. Today we get Google reporting their earnings. Is Tesla today too? I think I've got Tesla and Google up to bat today, which, yep. So today I've got two of my big positions, Tesla and Google, both reporting their earnings. So I'll be keeping close eyes on that after the bell today. Take a look at the dollar here. Dollar index not really moved too much off of this. Let's take a look at the yen, see if that has moved at all off of this. Dollar Japanese yen moving lower here last few days, but not a huge move in reaction to this. I think, again, these things are kind of like sniffed out by the market before they even get announced. So I'm not sure if you guys can hear that, but my cats are fighting. What's up, Sean? Good to see you, my friend. Hope everybody's doing well today. Yields are slightly higher, little bit higher, not tremendously higher, but a little bit higher. Euro is slightly lower. Pound is flat on the day. Dollar yen flat on the day. Dollar Swiss just a slight bit higher. Dollar CAD back down towards those lows.
Market analysis, free trading courses, edge finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
Yen pairs yesterday made some moves lower. Not really a whole lot of follow through on that front. CAD Swiss bouncing a little bit. Euro CAD. I did end up taking a small long position on this one. I'm also long NZD CAD. So I've got a couple of currency trades going on. Here's an update on my gold position. So I am long gold with a stop below structure here. Not planning to do anything with this trade here today, although with price pulling back, I'd love to see if we can get some kind of pullback, higher low, and then continuation there. Also, give me 1 second, guys. I'm going to try and get my my thing here to work. I'm having issues with my drawing tool, which I love my drawing tool. So I don't, I'm a little bit, I'm a little nerfed with no access to my drawing tools. Hold on, I think this fixed it. Come on, work for me. Yes, we got it. Ta-da! It's back. Okay, so anyways, what I'm looking for on gold specifically, any sort of higher lows would be opportunities for me to trail stops further. Although today's headline, not particularly positive for gold because trade deals are a positive thing. They're more security in markets. And so gold possibly trading a little bit lower on the announcement here of US and Japan potentially signing a deal and closing things up on the trade drama. It's just an amazing thing what happened this year. I've never seen anything like it to this extent, where we went from an environment in which, I guess we saw it back in August, but it was a little bit different, right? We had a really short blip of volatility back in August, like it was really extreme and then came all the way back down really quickly. But what's fascinating about what we saw here recently was with the trade war stuff. People were the bears came out of the woods big time. People got really terrified. I think that, inevitably people there's a lot of people who like Trump. There's a lot of people who dislike Trump, right? And so the people that have distaste for Trump, especially, were very vocal about, he's going to mess it all up. He's going to crash us to zero. Markets are going to go down. And so there was sort of like a bearishness in the room, plus political driven bearishness. The other side of that, anyways, where was I? So there was a huge move, both driven, I think, by market fear, because trade dynamics changing are scary to markets for a logical reason, but also because there's a lot of people who just really don't like Trump, and that's understandable. But whether you like Trump, and by the way, this is not just, one way. Before this all happened, there were so many people, I can't tell you how many people were like pumping stocks. As soon as Trump was announced as the winner, there were a lot of people who did the exact same thing on the euphoria side, right? Where people were like, oh, Trump's going to send us to a golden age of stocks, and you should buy stocks aggressively. Well, again, people make the same mistake. They let their politics drive their trading and investing decisions, which is, in my opinion, very dumb. Because the president is an important role, but it's not the end-all be-all to markets. Company profits, interest rate decisions, the underlying economy, all of these things are way bigger than just what the president can do. Yes, they can enact certain things that could potentially turn the ship a little bit, but it's bigger than one person, even the president. And so what people will often do is they will, say like, oh, Trump's in office, we're going to a golden age. And then the same mistake will happen to people who dislike Trump. They'll say, oh, Trump's in office, he's going to ruin us. And so these people will get overhyped and buy the market at the highs. And these people will get overly negative and assume, the worst case and sell their stocks or get short at the worst possible times. So the point that I'm trying to make with this is, regardless of your political affiliation, you're totally valid in liking or disliking someone based on your politics. Totally understandable. But do not let that guide your decision making in markets, because people who did that on both sides, people who are like overly, Trump fanatics and people who overly hate Trump, both of those people, I've saw it all over social media, made huge mistakes, pumping stocks at the worst possible time, pumping crypto at the worst possible time, and then selling stocks and getting overly negative because they don't like the president, right? Equally bad decision making on both sides. So just be careful with that, right? So the reason I have harped on that so much this year is because I saw it so blatantly across social media, and I really, you have to be really careful with that, because people make really bad decisions with that. They buy stuff terrible timing and they sell stuff terrible timing based on their, based on their emotions and their politics. Again, nothing wrong with having opinions on politics, but do your best to leave the emotional aspect of that out of your trading. Because it will be in my opinion, I think that it's a really dangerous path to go down, and can be very costly too. Market is a reflection of investors' psychology. It totally is, man. Totally is. Let's take a look here a little bit further. Gold moving down a little bit more here today. We have oil prices. My oil trade is still flat. Hasn't really moved too far in either direction. I still like oil to the upside. Bitcoin pulling back here a little bit. Still at 118,000. Really strong push overall this year for Bitcoin as well. You can see it had, actually, one of the most impressive things about Bitcoin is the way that it recovered all of its losses during the sell-off that we saw in the first part of the year. It recovered all those losses and more by like mid-May, which is really impressive. What's with Japan? US and Japan seem to be closing in on a deal, which is very positive for Japan, because a lot of Japanese exports go to the States. So a deal is great for both countries, but particularly great for Japan, as we are a big customer of Japanese cars, and that's a huge part of their economy. So the Nikkei flying high here today, looking really, really strong. I mentioned that this to me would be an interesting one on a pullback, so we'll see. And also, you kind of see the DAX trading just slightly higher. DAX still looks good to me because, I think that it is not, I think there's a good chance that pretty soon we're going to get deals between the US and Europe, and that also will be positive for the DAX. So, if you do get selling, I've been watching the DAX for a little bit here and do like the idea of getting back into my DAX trade and the Nikkei trade. I mean, this year has been, I made some pretty good returns trading the DAX this year, and I would like to trade the DAX again. I'd also like to trade the Nikkei again. Actually, I haven't traded the Nikkei this year, but I'd like to trade the Nikkei if we got a pullback. 39,500 looks interesting to me. So I do like that story. I also, of course, like US indices, but they have been a little bit stretched in my view. So I am interested in global indices, stocks in China, US, Europe. I like them all, but I like them better on pullbacks. So I'm not chasing anything. I'm just looking for pullbacks on indices at this time. But that is still a very strong trade on the Edge Finder. If I pull up the top setups simple view, what you can see here is that the NASDAQ, Dow Jones, Russell, SPX, Nikkei, Chinese stocks, you can see these are all bullish setups on the Edge Finder at this time, which means that after looking at the market sentiment readings that we're getting on the Edge Finder, the technical scores, which is looking at like price trend, but also looking at like seasonality, etc., and economic data, they are generally suggesting more bullishness than bearishness for the US indices. So I like them on pullbacks. So yeah, definitely important. Not being emotionally attached to a trade helps. Definitely. So important. Hey, Nick, how can I manage patience for swing trading? Sometimes setups sometimes setups don't occur for a long time. Then those periods, how can I manage the patience to wait for a setup? So, Sahil, that's a great question. First and foremost, the patience for swing trading is rooted in small position sizing so that you're not freaking out and staring at it 24/7, because that's going to make it really hard to be patient. So small size. And also for me, if you're going to be a swing trader, to avoid only having like one trade every other month, I trade a lot of things. So you can see my watch list is pretty expansive. I trade a lot of commodities. I trade indices. I trade currencies. I trade a little bit of everything. I do a lot of stock trading. So stocks and options make up a thing. So I have a huge watch list, which means I can still look at the daily chart and get setups on a regular basis. So for me, that has taken time to get more familiar with a wide set of different markets. But that has played a key role in giving me kind of a long list of stuff to watch and keeping small enough position sizes that it doesn't, keep me up at night. That's a really important component. You have to be able to sleep well at night and have enough trades that you can actually do this and, generate income from trading. If you only have one trade every other month, it's going to be, unless that trade is just perfect, it's going to be very difficult to create consistent trading income. It can be done. I don't want to say you can't do it, because there are traders who place like 20 or less trades a year and do really well. But those are going to be your really higher time frame traders, and it's going to be very passive, like very check in once a day kind of thing, not trading very often. Which, hey, you know what? If that's what works for you, there's plenty of traders who do very well with that. So I made a post on my Twitter yesterday just about like how the daily chart is really my favorite chart for a good reason. It's a lot less noisy than lower time frames. There's a lot of clarity that comes with the daily chart. And somebody commented back, and I loved their response. It was, when in doubt, zoom out when it comes to trading, right? Because there's just, if kind of thing. If you're somebody who trades the 4-hour daily chart, weekly chart, there's a good chance you started on the 15-minute and the 5-minute. Right. And what happened is every time you went up a time frame, you realized, oh, there's a little bit more serenity to my trading. Doesn't mean trading's easier, but if you have small position sizing and you're trading the higher time frames, this is my experience. And you guys let me know in the comments if you agree or disagree. But I find that charts make a whole lot more sense. Fundamentals make a whole lot more sense. Cleanliness makes a whole lot more sense on the 4-hour and the daily chart and the weekly chart than it does on the 5-minute chart. And again, this is personal opinion. Some people love trading lower time frames, and I'm not taking away from those people. You do your thing. But I have always been most effective on the higher time frames, where I can take a big picture view and I don't have to kind of stare at my phone for 3 hours in a row, day trading the 5-minute chart. I find that to be exhausting, noisy, and just not my thing. And again, I'm not saying you can't do it. There are people who do it clearly. But for me, I would rather check in on my trading, Look at the daily. I mean, what I do with you guys here makes up about, I would say, between this and filming my videos, which is also kind of an analysis phase for me, between those two things, about 90% of my time looking at markets is spent with you guys, just doing it as a group. I mean, you guys saw me. I was reacting live here this morning to what's happening with Japan and China and US, the trade deal occurring. What do I think about that? I discussed that a little bit. I think, a buy and a pullback makes sense to me, because again, there's a trade deal that's out of the way. That's huge for Japan. That's huge for US. And indices globally, I think, will kind of rejoice at the idea of the US making deals. So, you've got Chinese stocks moving higher, CNY. Is that the Chinese yuan? Yep, Chinese yuan's moving higher this morning. VIX is lower, right? Look at this, VIX down to a VIX down to a 16 this morning. So you have volatility drying up here this morning, or continuing to dry up, I should say. And be careful with this. Here's my opinion on volatility at this time. I do think that there's an old saying on Wall Street, which is you don't sell a quiet market. And I think it's very true. I mean, just look at the last few weeks, right? It's been a quiet market for a few weeks. And what has the market done? Just grinded higher every single day, right? It's been a great environment for risk on, because low volatility favors risk on. Low volatility means investors are like, all right, what altcoins can I buy? And I don't know if you guys, there was a little bit of meme trading or meme stock trading. Did you guys, anybody see Kohl's? What's the ticker? KSS. Kohl's Corporation traded up yesterday. Kohl's, like the most boring company stock in the whole world. Nothing against Kohl's. Hey, they're doing a great job. Maybe. Actually, maybe not doing such a great job. But Kohl's, and no slack to anybody who works at Kohl's. I'm just teasing. The stock recently had jumped at one point over 100% in a day. Kohl's, the boring retail outlet. There was a big thing about this. Kind of took the interest of Wall Street bets. So there is some of that stuff going on. You get kind of the craziness coming back. I mean, take a look at companies like Robinhood, which have just been insane recently. To me, it's like, okay, but the question is this market overbought? Is this market euphoric? What do you guys think? I'm curious. I've got my answer, and I want to talk about that. Is this market in a state of euphoria? Well, here's my answer. I think not yet. So let me show you what I mean by that. A couple things I could look at. Here's ARK Invest, which is Kathy Wood's, kind of super high risk, a lot of not yet profitable but growing fast companies, went parabolic in 2021, right? We dropped dramatically, went sideways, and we are on the rise, but that's not gone, insane. So that's one thing I would look at. Another thing is I would look at just my market sentiment indicators, right? I would keep it really simple. Let's look at market sentiment. Let's look at the put to call ratio. Put to call ratio on the S&P 500 still show bearishness recently. I mean, look at that. You have puts in high demand. Perhaps that's a little bit of a hedge on earnings season, which is starting up here. Google and Tesla reporting after the bell. Let's just look around for a second. Put to call ratio. Yeah, I mean, put to call ratio looks a little bit stretched here for the Russell. People buying puts on the Russell. What about the NASDAQ? Okay, NASDAQ's a little bit more neutral. Gold about neutral. And if you don't know what the chart I'm looking at is, this is the put to call ratio. It shows option volumes. When this chart goes very high, that shows you that investors, traders alike, are buying or trading puts aggressively. So that is a contrarian bullish signal for me when it reaches above this blue line. It's a contrarian bearish signal when this thing goes very low, right? So when sentiment gets really bullish or high call demand starts taking place, then I start to get a little bit more cautious. So when I look at the S&P 500, I mean, it's still sort of in a fear level on this chart, but this is why we look at multiple tools for sentiment, because take a look here. We also have a pretty evenly split survey in terms of what market respondents are thinking about the stock market. So it's mixed. You've got some bulls, some bears. And then we can also take a look at the Bitcoin to gold ratio. 1 second, guys. My cats are fighting. This is the downside of working from home. I gotta break up cat fights. It's not actual cat fights. They just wrestle and they start to get really loud. So I don't want to disrupt the stream. Bitcoin to gold ratio still looking very very interesting, right? Generally suggesting risk on here in terms of momentum. What about institutions? Institutions are kind of interesting. You do have some, I mean, this to me signals there's some whales here. Let me explain what I mean by that. So institutions, believe it or not, have actually kind of missed some of this rally back. A lot of institutions got really defensive, really risk off in this year's kind of chaos. And who can blame them? They're managing people's money. But to be fair, I've seen this rising thing of like a lot of the retail investors like won big this year. Like retail investors bought the heck out of that dip. We saw it posted all over the internet. Big brokerage houses were showing retail flows were really positive. Investors were buying stocks, like retail was buying stocks, and institutions have actually been offloading stocks. So if we take a look at, for example, take a look at SPX. Institutions have actually been offloading some stock shares. Now, here's my thought on stocks or indices in general. They're priced expensive. And if you don't know what that means, basically the overall market is priced very rich relative to the market's earnings. PE ratios are a thing that you can track. Historically, they've been lower than where they are currently. So they're priced expensive. And I think institutions are like, yeah, we're going to like take a back seat to this. And there's that possibility that the tariff drama is not over. But timing that has been a tricky trade because, again, VIX stays low and market keeps continuing to grind higher. So for me, how do I actually play with it? Well, I'm bullish. The Edge Finder still has bullish readings on indices. So the way I play that is I look for pullbacks and that is it, right? There's nothing I can do here. The risk to reward doesn't look great. I've got to look for a pullback. I'm going to quickly take a look at some currencies. Let's take a look at euro dollar here. So euro dollar rebounded nicely off of this support area. Pound dollar also bounced off support. I do have a short position on this one with willingness to add a second short position if we were to push higher. I'll continue to update you guys on that one. Dollar yen rolling over here. Looks like this one stays range bound, at least for now. I would not be surprised if dollar yen makes a push back down towards those lows. A little bit of yen strength to me makes sense because, again, you have we've talked about the interest rate differential. I'm not going to go into that too much, but essentially Japan is expected a rate hike and the US is expected a rate cut. I think that as a bigger theme will continue to trend dollar yen lower. Maybe not necessarily like right away and not all at once, but to me, the higher you get on dollar yen, as long as that general consensus is still there that the US is going to cut rates and Japan's going to hike them, to me, these are sell the rally kind of moves until proven otherwise. So that would be my opinion on something like dollar yen. I'm not particularly bearish on the dollar, but I do think that the bigger theme for yen could still be some strength. So we'll see. Actually, I think the yen, I could be wrong. If I look at COT data history for Japanese yen, JPY is what we want to look at here. And I'm just going to fix something really quick because I want this to be single select only. There we go. So if I look at Japan, right? If I look at JPY and we take a look at this, you can see that there has been a little bit of institutional selling on the Japanese yen. Perhaps that's a little bit of raising cash to buy risk assets. We'll see. But keep an eye on this. There's still overall a very heavy long concentration in the Japanese yen with institutions. So this could, kind of do this over the next few weeks. But the Japanese yen is still I think the strength here is still there in terms of institutional positioning. We will see what happens with the indices from here, but I would be more interested in a pullback than anything else. Gold, we'll see, looking for a higher low here for an opportunity to trail stops. What I love about trailing stops, right? What I love about this is really simply, I don't have to do anything today with gold. This is why I love swing trading. Now, I know as day traders, right? Day traders love that they can be flat by the end of the day. You know what the swing trader card is? The cool points for swing traders. I have nothing to do on gold today. My job is to do absolutely nothing on gold today. That's an awesome play card, right? Because I'm already in a long. The long is doing really well. We've got higher lows forming. I've got my stop locked in place. So even if this thing were to melt down today, I'm going to make money. And if this thing today does this, then tomorrow I'll trail a stop. Right? If in the next 24 hours we see move down, shoot higher, breakout, all I got to do tomorrow is move that stop. It's like stupid simple. Now, of course, years of effort have gone into building the system that I have. The Edge Finder playing, of course, a really big role, and this is thousands of hours of efforts to build a tool like this. But what's beautiful about this is that years into my journey now, my actual trading and execution is like 20 minutes max a day. I do analysis for about an hour and a half a day, but a lot of it is, of course, on camera and hanging out with you guys, which I enjoy doing. But yeah, something to think about.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.